Derrick, good morning. How you doing, my man?
Hey, good morning. I'm doing well. How about yourself?
I'm doing really good. Look, I love T3 Tuesdays. I love you prop guys. I think you guys have an extreme edge in the market here, and I can't wait to talk to you about that. I do briefly want to start off with your morning routine here because we had Scott on last week, and I asked him about his morning routine, and he launched into this whole thing about the sauna and preparing and all of that. I got to know right off the top here, do you have a crazy morning routine like Scott does?
I'm not jumping in the cold plunge. I'm not doing the sauna first thing in the morning. When I can, I like to get a little bit of exercise, a small 30-minute workout or a short run. I do think nutrition and vitamins are important, so I do try to eat healthy in the morning, and I have a cup of coffee as soon as I wake up. But I start my process for my morning research every day between like 5:30 and 6:15 a.m. depending on when I wake up. So first thing I'm doing is I'm assessing how we're gapping. I almost always have swing positions on. I've
Mhm.
got 28 or 29 swing positions on from yesterday through today. So I'm just managing, where those positions are per my game plans. A bunch of things are gapping down this morning, so I use that as an opportunity to further dip by some of my longs. So I go through a pretty long morning research process. I work with my team, the virtual trading floor that
Mhm.
your guests have the opportunity to join me in for the week. We get news in there every morning, all the earnings reports, analyst upgrades and downgrades, a ton of macro research. So I'm combing through all that every single morning to come up with ideas. And that is a couple hour process. And then at 9 a.m. is when I do a morning meeting for the team every day. So my morning process is not, jumping in the cold plunge or the sauna. I do try to get the workout when I can, but I'm more market focused in the mornings.
Well, everyone's a little bit different, right? And everyone's formula for success can vary slightly. So I think it's important to cover all of that. Sounds like you do a lot of research, and you're right. You kind of don't have a whole lot of time. You have a finite amount of time before the market opens there, and you're doing several hours of research prior to the open. So really awesome to see. Derrick, would you mind telling me a little bit about your top-down approach that you focus on?
Sure. So I'm a big believer in starting with the big picture and then working your way down to the small picture. I think that even if someone is a pure day trader, which I no longer am a pure day trader, the first several years of my career, I exclusively day traded. I never kept positions overnight. But even if you are just exclusively a day trader, let alone a swing trader, you're going to have a higher probability of success if you're trading in the direction of the bigger picture. If you're trading in the direction that the market itself is moving and you're trading in the direction that the daily chart of the stock that you're looking at is moving, you're going to have a higher probability of success. So I start big picture down to small picture. I start with the indexes, the S&P, the NASDAQ, the Russell. I'm analyzing the technicals on like a daily chart initially. Then I break it down to a little bit of a smaller picture. How are we gapping this morning? How do I want to position myself around that gap? What are my expectations for the day? And only after I've done all of the market level technical and fundamental research do I then dive into individual stocks. So now it's like, all right, I understand the market's telling me I want to be buying the dip. I want to be, looking to go long here. All right, now what are the best stocks to do that in? What's showing relative strength? What has news? What's near a breakout level? What should I be involved in on the individual names? That's kind of the process that I work through every day.
Okay, that's awesome. One of the things that you were talking about a little bit there is time frames and how you assess what a stock or what an index is doing based on different time frames. Can you elaborate a little bit on time frames and how those matter to the trade and how they actually affect your decision making?
Sure. So time frame continuity is an important layer of probability, and that's a loaded term, layer of probability. So to take a half step back and break down things even further for some of your listeners, trading comes down to risk reward and probability of success, right? That's the magic formula of trading. Risk reward is generally pretty simple. It's simple math. I'm looking to risk 10 cents to make a dollar, whatever your risk reward is on that trade. Probability of success is much more difficult. It's much more dynamic. There are just so many influencing factors that will affect any position that you're getting involved in at any time. Those influencing factors, the term I use for them is called layers of probability. All of the different things that will affect the trade while you're getting into it. One very simple example is the market. If the market's moving higher, and you're going long, you will have a higher probability of success than if the market's moving higher and you're trying to short. Everything else out equal. So then we want to go through all those different layers of probability. One of them is what I call time frame continuity. Am I getting the same message from the stock that I'm looking at or from the market that I'm looking at on every single time frame? Is the daily chart telling me higher while a 15-minute chart is telling me lower? Well, that's not time frame continuity. So what's more important to me? What wins there? So a lot of what I try to do as a trader is I study the daily charts to tell me what I want to be involved in. And then I look at like 5 and 15-minute charts, smaller time frames for how to execute those ideas. What that can enable me to do from a risk reward perspective is have small time frame risk from a 5 or 15-minute chart, but daily chart level reward. If my day trade works out, I keep that position overnight, maybe now I'm getting into a multi-day move. So I actually tend to not really think about risk reward ratios very much in my trading, because I think with the principle of understanding time frames, again, where I'm able to put risk on a small time frame, but look for reward on a daily chart, the risk reward ratios will naturally work themselves out and be in my favor.
Okay, awesome. We are talking with Derrick Oldensmith, Vice President of Trading and Education at T3 Live. Be sure to trade with Derrick for free in his Pro Desk virtual trading floor, November 20th through November 22nd. Go ahead and scan that QR code to get rolling there. So you were just talking about timeframes, which is awesome because that's something that I do as well. I'm constantly looking to see, okay, if it looks good on the daily, what does it look like on the hourly? What does it look like on the 15? And if all of those timeframes line up, giddy up, that's probably the stock that I should be trading there. One of the other things that I know about you is you're big into tape reading. And this is also something that we do, especially when it comes to day trading. Can you talk a little bit about that? Maybe your best lessons from what you see from reading the tape on a daily basis, whether it's an index or an individual name?
Sure. So one thing I really tell people nowadays, so I have a really strong background in tape reading. When I first started on the physical trading floor at T3's office in 2010, 2011, I was surrounded by traders who were really, really good tape readers. And the way that I learned was just by listening to them speak and following along with the tape on the level 2 as they spoke, to try to just to learn. And that's how I picked it up over time. Tape reading is still a useful skill in certain situations. It actually helped me big time in a Palantir trade at one point last week, which is a name that I want to briefly talk about with you at some point today. But broadly, I think that tape reading as a skill is not as important as it used to be, because the algorithms that are the primary execution traders for a lot of the big funds that are moving stock are better than they've ever been at disguising what they do. So tape reading can still be a very useful skill in certain situations, particularly IPOs, news events, after hours, immediately on an earnings report after hours. It can help with execution. It helped me big time with it with this Palantir trade. Trying to remember which day that was. That was on November 13th. Above $63. The stock ripped up to new highs, got into $63, and I was able to just identify a massive, massive seller in the tape on the level 2. And even though on that day, the stock was forming a bullish pennant that looked like it was setting up to break 63, I was actually heavily, heavily shorting on the side of that seller because I thought that seller was so heavy and so strong that it was going to cause the bullish ascending wedge on the 5-minute that day to fail. And that idea turned out to be right. And on that day and throughout the next day as well, because I got followed through the next day, the trade worked out really well for me. So in certain situations, it can be important. But for newer traders out there, it's a skill that's so hard to develop these days. I think it's more difficult to develop now than when I got started, because the tape isn't as clean as it used to be 15 years ago. So I tell people, if you want to learn the tape as supplementary learning, it will help you, but start with charts. Learn your technicals first, learn those charts first. I think that's actually a more important skill these days to have. And once you feel like you're a real master there and then you want to expand and develop other skills, then sure, we can talk about how to learn to read tape a little bit and how it can be effective.
Okay, there's so much good right there. There's so much good right there. When I first started, I also talked to people that were very, very experienced reading the tape. And as the years crept on, they would continue to say, man, this is getting harder and harder and harder. And I didn't really have anything to compare it to. So it's great to hear you say the same thing. Palantir, awesome example. Our community here trades Palantir on a daily basis. All different types of trades, short-term day trades, long and short. We've been long this since like the high 20s on a swing. So this has been absolutely awesome for us. Looking at the Wednesday, the 13th here, I mean, this is as clear as day that there was a sell wall there. This actually reminds me of the Amazon, the Bezos wall at 200 when he was out there shelling out stock. This looks the same, just kind of an intraday picture here. In the moment when you had talked about this kind of being a bullish ascending wedge, and in the moment, what did you see where you just said to yourself, you know what? This is definitely a good setup here to go short. This is definitely going down, bullish wedge, whatever, but I see it on the tape. What specifically was it that just kind of set off that alert for you?
Sure. So again, I always start big picture down to small picture. So I got to start by looking at a daily chart. And on that day, on November 13th, when this thing was at $63, the 80 EMA was still at $56 and the 21 EMA was at 50. So, and it was also like a day 9 to the upside or so. Maybe there was a 1 day break in that. So I'm looking at a stock that is massively extended to the upside. So if a stock is extended to the upside, to me, that means, and I have rules where I gauge that. First of all, it means to me, I'm not buying it. I don't chase price. I'm not going to be the last buyer on a day 8 to the upside. So I'm not going to buy it. It doesn't necessarily mean short. It means I'm not going to buy it. However, I may consider shorting it if I feel that there's a good opportunity also to come in on the other side. So again, starting with the big picture, I know on that day, I thought that there was room for Palantir to break down, probably back down to like $56 or so, even as it was trading at 63. The low the very next day was 58.50. It didn't quite get to my full target, but it was still a solid $5 downside move. So starting with the big picture, now breaking it down to the small picture. All right, stock just rips higher in the beginning of the day once again. So now I have extension on multiple time frames. I have extension on the daily chart. I have extension on the 5-minute chart. I'm watching it very closely. In the initial move, when it got above 63, I saw a huge seller come in at 63.25. And that seller was disguising his or her size. It was a refreshing order. So it's refreshing very heavily at 63.25, and it even lifted. So, and this is why I say tape reading is actually so much more difficult than it used to be, because these are smart players. It's not like 15 years ago, if that person had 1 million shares to sell, it might have just thrown 500,000 shares on the offer and said, here I am. And you would see that, and it's clear as day. This seller sold a boatload of stock, but would come in at prices, refresh on the offer. If he was getting taken too hard, would let the stock rise, come back in at a different price, or cross his order back down to the previous price that he was at, which first I saw it come in at 63.25, and then very heavily at $63 pretty much for the rest of the day. So it started forming that ascending triangle. There was still underlying demand in there, rising that into 63, but 63 was that seller. It would lift, it would a bunch of buy stops would go off, it'd go to 63.09, and then come right back down and slam the people that just bought it. And then eventually that pattern broke down because of how strong that seller was. So it started with the big picture, and then we broke it down to as small of a picture as not just the technicals, but also the tape itself. Now, if we're talking about Palantir, I just want to bring this up because I got something that's really, really grinded my gears this morning that I want to be able to utilize your forum and any other forum to mention real quick. Something really strange happened with this stock on Friday. So Friday, the market got smoked, and I was still short because I was looking for more of a move. And I am still short today, so I want everybody to be aware that I'm talking my book here, and I'm always very honest on my trading. I got absolutely smoked short Palantir on Friday. I'm not afraid to publicly talk about where I lose money. But a really interesting thing happened on Friday. One of the directors, one of the board of directors, Alex Moore, tweeted, and I've got the tweet in front of me, so I want to read it. We are moving Palantir Tech to NASDAQ. because it will force billions in ETF buying and deliver tendies to our retail investors. Player haters, be aware that we've been hated for decades, plural. Everything we do is to reward and support our retail diamond hands following. So on that day when Palantir ripped higher, you had this guy, as far as I'm concerned, coming out and pumping the stock. The market got smoked that day, but Palantir went higher off of this news that they're trying to get themselves added to the NASDAQ. And then you've got this guy coming out about how there's going to be tendies delivered to retail investors. Well, guess what I just found out yesterday? On the same day, the CEO of the company sold 6.3 million shares worth of stock for almost $400 million. So I'm looking at a stock here that trades at a 130 plus forward PE. And one member of the board is out there pumping the stock on the exact same day that the CEO of the company sells 6.3 million shares for almost $400 million. I think that this needs to be investigated. I'm infuriated by it. This is completely wrong. And if you think like, oh man, Palantir is on my side. I really like this guy, Alex Moore. He's here for the retail investor. You're the sucker, because these guys are out there pumping their stock while the other CEO, the CEO isn't a diamond hand tendies holder. He's pumping the stock at 130 plus forward PE multiple. It's just absolutely insane. We got to get the word out there. This should be investigated. This is completely and utterly wrong.
Okay, so first of all, I'm imagining that the crypto bro parlance that he was using was probably a red flag by itself, right? I mean, it's just unbelievable. And I've seen Alex, I've watched this too. I know exactly what you're talking about. I've seen Alex go on, Alex Karp, that is the CEO. I've seen him go on CNBC. I've seen him openly say how much he dislikes short sellers and this and that, and kind of lure people in. So really, really fascinating stuff with probably one of our most traded stocks around here. Really just awesome stuff, Derrick. Derrick, we've got more time. Is there any other stock that you wanted to talk about or cover or anything like that? I turn it over to you.
Sure. So happy to talk about the market period a little bit, because this has been a fascinating time for the market since the election. So the election happened and we had a massive upside 3.5 day move, or three in a morning day move that got this market very extended. Finally, over the course of Thursday and Friday last week, the market pulled back. It satisfied that upside extension and is actually beginning to retest the levels that it broke out from. I had been short that extension at certain points last week. Friday, I used that opportunity to cover every short that I had. I was short the S&P, I was short the NASDAQ, I was short the IWM, I was short Tesla at 150 plus, I was short coin at a certain point, and I was short Palantir. I've covered every single short except for Palantir. Palantir is the only one that I still have on my list right now, as this market has now corrected through price. And now I'm at the spot here where I'm really looking to buy the dip. So I started small buying the dip on Friday. I added a little bit yesterday. I added a little bit again pre-market this morning. I think that the seasonality of this November, December time is very, very strong. I think that the vol selling is going to come right back into the market. And you combine that with Goldman Sachs is modeling $6 billion a day in buybacks. There's just a lot of forced flows in the market right now that have me interested in beginning to build in on a dip buy for the indexes broadly and for a lot of individual stocks. So I'm looking at all three indexes at the levels that they're trading at. So for the SPY itself, it's kind of retesting this 584 area breakout that it had from the election. We're in that area right now. For the IWM, it's actually starting to overshoot a little bit on the downside, but it's retesting this like 226, 227 area. Yep. And it's now like day 5 or 6 to the downside. I know yesterday was an inside day. It was a little bit of a rest. So we're down 5-6 days in a row in the IWM. So I'm looking for this market to catch a little bit of a bid. I'm looking at a few things that are strong. I like Google here on a recapture of 175. I like Apple. If it can get above 228 to 230, that's a zone that I'm looking at there. I like the financials, like XLF, if it can clear above 5010. Note that a lot of these are if then statements, right?
Yep.
If we break out, then I like them through the levels. There's a few other things that are a little bit beaten up where I'm looking for oversold bounces. I'm looking for an oversold bounce in biotech, XBI, IBB. I already have positions in both of those. I started buying them a little bit yesterday, added a little bit pre-market this morning. I also have a position in Moderna, but Moderna's kind of already given the bounce. I'm actually more of a seller as we get into 40 than a buyer. I was a buyer a couple of days ago. So I've got stuff on the radar to begin to build in to buy the dip. I think that we could pull back a little bit further. It wouldn't be impossible for us to fill the election gap, which would bring you down closer to like 577 in the SPYs, or maybe a retest of even 580. So you have to be prepared for that and manage your risk accordingly. But broadly, I think that we kind of go into an upside grind here through the end of the year as the Santa Claus effect comes in and the January effect comes in, and then we can kind of reassess the market as we get into the new year. The one thing that you also need to keep an eye on, though, that could really derail an end of the year rally is the dollar and interest rates. And we're getting a little bit of relief on interest rates this morning. I see TLT's gapping up, so interest rates are down. But if the TLT really begins to lose on a closing basis, the November 6th low, and the 10-year starts to exceed 4.6%, I think that that's something that could derail an end of the year rally. But otherwise, I'm looking to buy this dip as we pull back here for an upside grind into the end of the year.
Okay. Derrick, that is awesome. Great little recap there. A couple of things I wanted to highlight here. Smashing the like for T3. I was also short Palantir on that Friday and proceeded to exit left. Good job sticking in there. Looks like you were not alone here. Joseph, my Palantir puts got smoked on Friday, so looks like you weren't alone there. All right. Derrick, really good. I got one. I have the audience will literally kill me if I don't ask you about NVIDIA. Do you have any thought on NVIDIA with the earnings print coming tomorrow?
We'll see what happens. You know, I don't, it's so hard to say. I tend to think that the risk is to the downside just because when you look at a name like NVIDIA, it's so hot this year that if they report like in line, for example, or maybe even if it's like a very small beat, it's probably not enough compared to what investors are used to. A small beat may not be enough. You probably need NVIDIA to absolutely and utterly crush it. But you can't count out that NVIDIA is not going to absolutely and utterly crush it because they always seem to. But I would just be a little bit careful. I think the risk is to the downside that if you get like an inline report that they break this thing down pretty hard. A lot of the other semiconductors have already broken down pretty hard. If you look at like AMD, $174 or so in October to 134 last week, which is actually that's another one that I bought on Friday last week. If you look at like a Micron had a great earnings report back in the end of September. It has not been able to pick its head up after such a great report. It's gone sideways and now it's grinding lower. NVIDIA is the one that seems like it's really held in because the hype is real. The uptrend is still intact, but I do think that the risk is to the downside on an inline report or God forbid a miss. But also pay attention if they crush it again to the 150 level on the upside. 150 is a big level.
Yeah, absolutely. Okay. Really, really great stuff there. Derrick Oldensmith, Vice President of Trading and Education at T3. Trade with Derrick for free in his Pro Desk virtual trading floor, November 20th through 22nd. We have the QR code on the screen. Link in the description below as well. Derrick, thank you so much for your time here today. This was an awesome run around. Cannot wait to do it again. All right.
Thanks, Ryan. See you next time.